Welcome to today's featured presentation, Stock Picking 2020-2021. What we want to reach is showing you a method of how to pick the stocks to invest in that have a stronger than market expectation. To do better than the market and to compare, we pick the SPY, the ETF of the S&P 500, and here on the chart we compare it to Microsoft. Microsoft is that red and blue line going up, and the SPY is the pink line. And you see there is a difference. Had we picked in the long run from end of April or starting of May to today, mid of December, we would be better on with investing in the market by 9% over if we had invested in Microsoft. So that wouldn't have been a great pick, and we didn't pick this one, because doing better than the market needs a comparison. That's what we do. We want to have stocks that reliably trade and not jump up and down like crazy. We want it to be indicator based, so a system shall tell you when to invest, when to buy and sell an asset, and for how long to hold it, to follow mechanical rules with clear-cut entries, exits and stops. I give you examples, and by a concept, like risk limited trade, no guessing, follow mechanical clear-cut system based entries and exits. And key to that is you have to have an opportunity finder, and that's what I'm going to share with you today here in that presentation. My name is Thomas Barman. I'm your presenter today, and I'm here as a trader and educator, not as a broker and dealer, and I also want to make you aware of the risk in trading. An old stock market wisdom is saying, sell in May and go away. However, we said, okay, we don't believe in this. We take on the challenge, and we pick in May stocks that we foresee are going up mainly. So therefore we wrote an article, and it came out here on the 4th of May on our blog, where we identified those, and now we want to check how well we did. Here are the stocks we published on the 4th of May saying, okay, they have a high likelihood being stronger than the market going up. And so you see it comes from Amazon down to Apple, the Qs, Abbv, Octas, Yen and GME. And now we want to pick those in their performance. You might ask yourself, why did you explain here ETFs? Some people were not willing to spend for one share the amount that Amazon is worth right now. And so therefore an alternative would have been the ETF XLY, or here instead of Apple, the ETF XLK, where Apple and Microsoft are close together of a 50% performance in that ETF. So let us go now, compare and see how we can get on the challenge to do better than the market. We look at the first stock, Amazon, and what we took here is just an example of a daily comparison, while when we look longer term, we compare weekly developments, important weekly developments. Here's Amazon on a daily. So for whatever we do, we spell out a SPU. That's the speed unit. That's the minimum expected price move after an indication, and here on a daily Amazon was about $58 or 1.9% measured on the last bar here. So if we had invested into Amazon instead of the SPY, and by mid-December we would be 10% ahead. But we can do much better by not believing that long-term buy and hold is going to work. Rather trade shorter term. It doesn't mean a day trade, but shorter term, and I explain you how we do that. Here you see on a short glance how our charts look like. We frame up rising price moves in blue, and the system does that, not us, and down in red, and always you see here a red line. That would be our trailing stop. So this is how we trail a stop, and you see here also spelled out new signals in the rise to the upside or to the downside, like buy above a certain threshold. When it is taken out in a continuation of the next candle, which was the case here, then we go for the next trade. And as said before, we appraise based on weekly charts. We use here the Neverless Trading double decker, that's that red blue frame. We use a SPU measure, and you see here on a weekly, Apple currently has a SPU of $7.52. That's the minimum we expect. And you'll see in a continuation, after a 2 SPU expansion, we assume that there's an 85% likelihood that the price move is not continuing. What we do, we take our exit and a positive exit instead of a stop with the trailing stop line. And we also define our maximum time in a trade, 10 bars. Here in our instances, it will be 10 weeks. Yeah, and the buy and sell indications that come from the systems, therefore we don't have to guess. You see here 1 SPU, 2 SPU, target out, and this is exactly where the price made a turn. And this is not magic, this is following a system that measures underlying changes in supply and demand. Starting out with Amazon, you see the price development we got in here and carried out the trade, and we knew after 10 bars, or when the red line was reached on the retracement, we're going to be out of that situation. Had we invested just in Amazon and held it, we would be 7% ahead of the market, but that's not good enough for our way of trading. Look at here, entry at 256 and exit at 3,100, 37% return in a matter of 2 months. That's an overachievement, and that got us also out when we were on a high performance way at above. Did it go higher? Absolutely, but that doesn't matter to us. We follow a system. When the indication is there, we follow for 10 bars, or here we got stopped right at the red line. Here you see the weekly chart for Amazon, and we were entering right here. Yeah, where you see my cursor, and we carried out the trade for 10 bars. So here was bar number 1 in the trade, number 5, number 10, and there you see, okay, after 10 bars it was time for us to go right at the closing of the bar, and then we had a bit of a retracement with a new opportunity arising right after with that buy signal, buy 106.42. Next candle ticked higher, we carried out the trade, target 2 was reached right in that candle. That's a 2 SPU price movement. Here average SPU is $7.50, always measured at the last bar, and so there we carried out the trade, brought it home on a way overachieving compared to the S&P 500. And the cool thing is we always find new opportunities because the system provides them to us. Here you see the weekly chart of Abbv. And you see that we carried out a trade right as we did with Apple and Amazon. And on Abbv, you had your entry here. That's the first bar where we got ticked in. And then we continued on that. And bar number 5, we already expected some price move, and then we were taken out by the red line, by the stop, and we made a good progress. However, we could have even stayed in for 10 bars, but that wasn't the case because we had our exit early. Stop was taken. We could put our money into a new opportunity, but then down the road we had a sell opportunity if we take those, and that's what we want to encourage you for. Have strategies and ways also in your IRAs for using short opportunities so they arise. But then again, we had a long opportunity, and you see it was just carried out into mid-December at target 2. We took our exit on this one. And you see, following a system, taking clear-cut entries, following price threshold, that's the way how we go to market. Siena, the network company, was one of our picks. And let's see how we did. In the long run, we would have been off, but however, we trade that differently. Yeah? The first attempt here, we ended at 48, carried the trade out to bar number 10, and with that realized a 17% growth and brought the trade home. Then there was the short opportunity. Had we taken it to the target 2, 11% additional return, and here on the newest, just carried out and brought home in last week, mid of December, we made the difference between 42.5 and 48, or a growth of 14%. So this is how to do it. Take the bites off the market as they arise. We don't believe in long-term buy and hold. We look out 1 to 10 bars, and if then the trade's not at its target 2, then we'll fold it like we did here. But if it's at target 2, we carry it out and carry it home. Here it took only 1, 2, 3, 4, 5 bars. At target 2, we follow a mechanical system. That's when we take our exit and we find a new investment opportunity. At this point, allow me the question: do those indications solve your decision-making challenges for the future? I hope they do. If they do, you are invited to call us or write us an email, and we work on an individual presentation with you where we see where we can fit those opportunities into your portfolio of investments. So give us a ring, 866-455-4520, or contact@neverlosstrading.com. At this point, we do not want to make it simple and say trading is easy. It is not, but there is a recipe for success and we want to share it with you. If you want to take your slice of the market that should look like that, juicy and enjoyable, you'll need to put the right ingredients together and also use the baking time, like the time to market with the 10 bars, and the right temperature so that everything works out the way you want it. Unfortunately, many traders lose money within their endeavors. Then they bring this out as a result, sugarcoat it and say that that's what I always wanted. Let's jointly strive for the right slice of the market so that you can enjoy it, and we want to help you getting there. A recipe for trading success. How does it read? We need to have a price move indication by a system, and it has to be high probability. We need strategies to limit the risk, because that's where a lot of retail traders, private investors are hurting. And we need the trade finder, yeah, so somebody who helps you indicating those, and I have different solutions here for you. And we need trade repair, money management, a business plan to follow consecutive action, and account management, being able to work in all of your accounts with that system. So meaning 401k, IRA, and shorter term trading accounts. At Never Lost Trading, we believe in individual learning and teaching. The word never lost trading derives from never stop loss trading, so it doesn't mean you never lose a trade, but we repair trades if they go wrong and try to turn losers into smaller losers or potential winners. So when we work with you, we identify jointly opportunities, risk, evaluate them and limit them, and within that starting a circle of constantly reinvesting based on your personal risk tolerance, your holding preferences, your difference in availability. Here, some people have 2 hours a day, 1 hour a day, 2 hours a week, and there's a system and an indication for each and every individual trading decision, and we teach those to you so that it fits. And there's a preference to assets. Some people like futures or forex or stocks or options. We'll always tune everything to your specific wants and needs and cover all your account types, from longer term investments like 401k, IRA, to shorter term investments on trading accounts and margin accounts. So we are open for that, and we work with you individually at your best available days and times. We put that recipe into a success function and say, okay, what's the weight? How do all these individual criteria work together, and what do they mean for you? And you can go through, because I will add the text right underneath here on the blog, so everything I'm saying you can also reread and can take your time for that to evaluate of how we appraise that. We are a quantitative house, so therefore quantitative analysis in decision making and weighing opportunities and finding the best path for us. That's what we do day by day. Yeah, and with that we put a simple linear function, and the key is many of the retail traders, they sit here in the losing proposition. You need to score in the arena of about 200 in that function, and then you can get the details. If you can't find it on the blog, write us an email, subject article, I zoom it over to you, and then you can have it, or you just go on our WordPress blog, Never Lost Trading, you'll find us there. We are in that business more than 10 years, so there is no way you can't find the article. Our clear aim is to share the recipe of trading success with you and teach you all those elements, because like baking a cake, if you forget to put in the eggs, the result will be different. And the same in here, if you don't do a good account management, you might do well in a short-term trading account but get hurt on a long-term trading account, and the average investor has 4 to 5 times the long-term account value than for a shorter-term account value. That's very important, and we want to focus in a holistic approach, helping you in all areas. Let us now share 2 of our systems with you. The first system is called tradecolors.com, very simple based. You trade on a 2-candle color scheme, and in the next candle it has to be taken out. So our system colors the candles, and you trade at key price turning points. These are underlying points where changes in supply and demand triggered that there is a good and high probable entry, and with that you carry the trade out. Yeah, blue for up, red for down. Very simple. Yeah, and you count the candles. counting candles 1, 2, 3. Trading is now easy for me, but look, you see with the recipe there's a lot involved, and we want to share all the components with you. And crucial is, and that's also when you take on our challenge and you want to have a consulting hour, 65% or higher probability in finding the right direction is essential. As a retail trader, you don't want to trade below. We started out talking about an index, and so here I take the future, the ES, the E-mini S&P 500 futures contract, and see how a system like ours is carrying out trades. And again, I take the weekly chart on this one, and we have always a SPOO spelled out, that's 101 here, and I'll make a bar, or here an arrow, that is signifying how far it reaches and where the opportunities are. You see where they are? Let us highlight them. Yeah, so you saw an opportunity here. Two of the same, next candle carried it out, got it home. Then we have a rebalancing. You might say there was a trade, but the next candle didn't take it out. So then again, we had the situation here. Next candle did carry it out. And so this is how we go to market. And we want to show you those opportunities on here with the bars. So number 1 got carried home. Yeah, there was the stop. Number 2 got carried home. There was the stop. Number 3 got carried home too. Yeah, it was a little tight, but yeah, it worked. And so with that, we tell you, we always evaluate. Even if you say, okay, that might have been a loser, it would be still 2 out of 3, and that's what we want to reach. That would be 66%. We want to be above 65%, but always we trade only if risk and reward is in balance. Maximum 1.2 times the risk to reward, and maximum 2 to 5% of risk in the trade. All of these we massage through, write it down for you so that you have a clear focus of what to trade for, how to execute the trades, and what to maximum risk. If you see the value that we want to give you with all of these, we give you even more. We install the software for the server, so you get a full service. We give you real-time data for free by the broker that we associate the data stream with. We give you clear-cut entry, exit, and stop. We help you with the position sizing for every opportunity based on the relation of risk and reward and signal strengths. We help you with watch list indicators for trade colors, that you have a list up to 50 symbols where you can pick out, okay, these are the ones on the time frame that I'm looking at that have the right constellation, all installed for you, help you with the risk limiting strategies, and a business plan for trading success that has an action plan, when to trade, when not to, and also a financial plan that spells out how often do I want to trade, what instruments do I want to use, and how much return shall I expect out of those endeavors. And yes, for tradecolors.com we have a special offer. We provide you something that puts you in action with a system. It's our introductory system, and when you call us and work with us, we work with you. As the next system, I want to share Never Lost Trading Top Line with you. Top line is the top of the line, and that's actually the product we sell the most, helping traders and investors to make sound decisions right from the chart. And let us look here. That's again a weekly chart, and within following the red lines on the chart and the buy-sell indication, we would have just acted like that. And imagine you just have a portfolio that goes with the overall market, and you be able to follow this, see how what a difference it can make. Here, week 3-2, there the red line was taken out, we went into cash. I just want to show you cash and not cash. Definitely we trade to the downside, but I want to keep it very simple here. Okay, so there is the buy signal that we had here, invest on 413, above 280 it says 64.68, but you know the high was taken out here, trade was carried out, and we made 60 points to the upside, exited the trade at 914, at 340. Then again at 340 we reinvested on 928 when we had another opportunity, made 10 points, cashed out at the week of 1026, and then reinvested in 11.9 and cashed out. So when you see all these individual transactions, it's not that many, but it gave you a 20% performance, while with buy and hold you would be just 5% up. That makes a huge difference. Imagine you have $100,000 in your account, or 50, that pays quickly with just a couple of trades for the program. Does that also work for swing trading and day trading? Absolutely. You see here multiple opportunities arise First one, opportunity to the downside. If you can't follow it within shorting stock, you can basically buy puts, and we show you which ones to best buy. Carry out the trades to the downside. There was an opportunity to the upside, and there was two opportunities carried out. Just the most recent one here. Yeah, two SPU of a move. There's the second SPU, and the trade is carried home. That's the daily chart for PayPal that you see here. You want to learn how to work with risk-limited strategies. Those are essential, and they work with stocks with options in combinations, or just option strategies here, simple strategies. We don't do it complicated. Long puts and calls, long verticals, short verticals. These are credit spreads. Those are the trades we put forward based on the chart situation, and this will always limit your risk in trading, so that you never have a surprise in a black swan event. You know the maximum that you can lose. And on the other hand, we also work on hedging strategies with you. There's a lot to answer for that. I don't take the time here in that presentation answering all these, but when we start working together, you get your funnel of knowledge filled by having the right price indication, what's a valid option chain to trade for, what is a trade repair ability for different situation, and what are the different strategies to best apply. All of these will count together, making you a different trader than you are today and limit your risk. If you want to enter the world of rule-based trading, picking up individual opportunities right at the spot when prices turn, we work 10 or 20 hours with two different top-line models with you, and we meet online. Every session gets recorded so you can go through the learned, and also every session is prepared. It's not always the same, so that I could send a video. We tune it to your specific wants and needs, work your business plan, and trade with you for a certain period of 2 to 3 months to make certain that you have all the skills on hand that you can carry yourself forward as the trader or investor you want to be. Let us help you to learn rule-based trading, apply risk-limited strategies, do the right account management through all your investment accounts, and with that we work one-on-one with you for multiple hours, for multiple weeks and months to make certain that you are on the right way with your trading and investing endeavors. Call us 866-455-4520 or contact at neverlosttrading.com to carry forward a consulting hour with you where you can see live how our systems perform. We are looking forward to hearing back from you.